You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 10th day of July, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first broadcast, that's our live training room. So to get in there, you either have to be one of our traders or taking the 1-week free trial. If you've not yet taken the 1-week free trial, when Michael joins us in about an hour, he'll walk you through step by step how to do it. No credit card required. You'll have access not only to the live training room, but also everything we offer. In fact, for 5 consecutive trading days, we treat you like you were already a member, giving you access to everything with one exception, and that's the members only workshop every Thursday night. Now you might be thinking, I better wait till Monday. No. Get signed up today. Your trial will officially start tomorrow, and it will run all the way through next Thursday. 5 consecutive trading days. Now, when the live training room ends at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the noon broadcast, which, unlike the morning broadcast, is open to the public. That's everybody, everywhere, on planet Earth and points beyond with an internet-connected device. Now, the best way, go here, you only have to do it once, mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day you'll get an email about an hour before this broadcast starts. In that email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you'll have automatic access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from your desktop. Maybe you're on vacation this time of year, but you still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. Well, you can do both of those via our YouTube channel. And it's easy to remember, youtube.com/CFRN. That is the Christian Financial Radio Network since 2005. But you don't have to remember all that, just youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,800 daily episodes archived for your educational and viewing pleasure. Now, if you're new to our neck of the woods, it's a great way to get to know who we really are. And thanks to the power of YouTube, you can actually see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to, but it's a great resource to have at your fingertips, and it lets you know we've been around for a minute or two. And again, it allows you to see how we've evolved over the years. youtube.com/CFRN. And while you're there, make sure you hit the subscribe button and tick the little bell, because going forward, we're going to start doing some mini broadcasts outside of our regular broadcast schedule. And if you're a subscriber and you've ticked that little bell, you'll be notified anytime we choose to go live. It also helps more people find our channel so that they too can learn how to trade. Our schedule for each afternoon broadcast is posted right here. Michael will join us at the top of the hour for a recap of what happened this morning in the live training room. Then we'll do some live trading on the TradingView platform for 30 minutes. But for now, we're going to jump into our daily devotional. And we're starting a new topic. The Holy Hustle. That's what we've talked about for the last 10 days. But today, we're going to dive into something new. The topic of our new devotional for the next 5 days is commitment to community. Our scripture today is Genesis 1, verses 26 through 31. And I'm going to share it with you from the NIV translation. Then God said, "Let us make mankind in our image, in our likeness, so that they may rule over the fish in the sea and the birds in the sky, over the livestock and all the wild animals, and over all the creatures that move along the ground." So God created mankind in his own image. In the image of God, he created them. Male and female, he created them. God blessed them and said to them, "Be fruitful and increase in number. Fill the earth and subdue it. Rule over the fish in the sea and the birds in the sky, and over every living creature that moves on the ground." Then God said, "I give you every seed-bearing plant on the face of the whole earth, and every tree that has fruit with seed in it. They will be yours for food. And to all the beasts of the earth, and all the birds in the sky, and all the creatures that move along the ground, everything that has the breath of life in it, I give every green plant for food." Now that's the scripture potheads like to quote a lot. And it was so. God saw that all he had made, and it was very good. And there was evening, and there was morning, the sixth day. Again, Genesis 1, verses 26 through 31. God desires community. God himself is a community. He exists as God the Father, God the Son, and God the Holy Spirit, a perfect eternal community. We may never fully comprehend the Trinity of God, but we can recognize that he models perfect community. Before we even begin to grasp the idea of community for ourselves, we have to start here. Since the beginning of time, God made this a priority for creation because it reflects who he is. When we read the creation story, we see that God was not merely displaying his power. Yes, he created the heavens and the earth, the sun, moon, and stars. But his most beautiful creation was a harmony between God, man, and the earth itself. In the beginning, when everything was perfect, God and man lived in perfect wholeness, shalom, with all of creation. This is how things are supposed to be, because it represents who God is. God is perfect and did not need us or creation, but He chose us. This means that He desires a relationship with us. Have you ever thought about that? God created us because He wants to be in community with us. He's not a brooding authority figure in our lives. He's a loving and caring Father who wants to be with us. No matter how many friendships have failed us, no matter how many times we have failed at friendship, there is a perfect friendship available to us. In Genesis 1, God said, "Let us make man in our image." Because we are made in God's image, we are made whole in community, first with Him and then with others. It's amazing to think that God chose a relationship with us. Living in community was an important part of creation. How does it feel to know that God designed us to live this way? If it is discouraging at first, that's okay. This type of community can often seem unattainable. However, as we get to know our Creator and allow Him to know us, the picture becomes clearer. So spend some time today reading the creation story and reflecting on God's presence in your life. And then answer this question: what is God saying to you? Let's pray. Heavenly Father, your creation, help us to live with purpose, dignity, and responsibility, reflecting your goodness in all that we do. May we honor you with our lives and care for all that you have made. It's in Jesus' name we believe and pray. And everybody said, amen. Amen, and happy Thursday. Speaking of Thursday, tonight is our members-only workshop, 8 p.m. Eastern. So if you're already one of our traders, please have your questions ready, and I'll do my best to get us started on time. I know a lot of you here lately have been showing up at 20 after, because that's typically when we end up starting, but we're trying really hard to actually start on time. Let me give you the numbers from around the world. Let me bring in some fresh data, because you deserve the best. Currently, the Dow is up 232 points. NASDAQ is down 30. S&P 500 is up 10. The Russell 2000 is up 14. Pretty quiet out there. Now, we have some high impact news tomorrow. We've had practically no news all week, but we do have high impact tomorrow morning at 8:30 a.m. Eastern. And then Tuesday morning, next week, we have some high impact news. In the commodity basket, crude oil is down $1.55. Now, you might remember if you were tuned in yesterday, I did say that I expected crude to go lower because of those inventory numbers and the fact that OPEC realizes we can stand on our own two legs. We have more liquid gold beneath our feet than any other country on earth. And we have more natural gas as well. So that puts crude down about 2.25% on the day. Gold is up $7.60, make that $8. trading 33.29 last. Silver up 66 cents, trading 37.29 last. That's a gain of almost 2%. When we go to the charts, it's going to blow your mind. Silver's up, I think, over $4,000 on the day. Very close to $5,000. When the price of silver moves $1, and we're lower now than we were earlier in the session, but we came real close to that $1 mark, and that's worth $5,000 per contract traded. In the Asian markets at the close, the Nikkei fell 174 points. Shanghai rose 16. Hang Seng gained 136. And in the European markets at the close, FTSE up 108. That's 1.25%. The DAX down 92. CAC up 23. So we had a mixed day in Asia. It was a mixed day in the UK. And because of the NASDAQ, at the moment, it is a mixed radio Thursday here in the US of A. The NASDAQ's only down 33 points, so in the grand scheme of things, that's not much for the NASDAQ. So that thing could turn around in a matter of moments and go from red to green. And as futures traders, we like to see the four major indices all the same color. They can be all red or all green. It doesn't matter, because with futures, you can be long, short, long again, all in the same hour if that's what the chart in front of you is telling you to do. And when they're all the same color, that's when you get better follow through on your trades. But for now, it is again a mixed radio Thursday. I think we'll see the NASDAQ go green probably by the time Michael shows up. All right, let's head over to the global news. Now, we all know about the flooding tragedy in Texas, but now it's spread to southern New Mexico. At least 3 people have died after historic flash flooding in the mountain town of Ruidoso, southern New Mexico. 2.5 inches of rainfall triggered a runoff in the Rio Ruidoso River Tuesday, causing waters to rise roughly 20 feet, the highest since 1978. At one river gauge, waters rose 19 feet in less than an hour. Vehicles and at least one entire home were swept away. So far, 85 people have been rescued. Wildfires last year near the river, including the South Fork and Salt fires, may have contributed to the flooding. Fires reduce the vegetation and roots holding soil in place. They can cause the soil to become unstable and more susceptible to flash floods. Floods this week come amid the North American monsoon season, impacting the U.S. Southwest from early July to early or mid-September. And we're starting to feel it here in Phoenix. The humidity is rising. And the death toll from the Central Texas flood has risen to 120 people. Over 170 people are still believed to be missing. So our thoughts and prayers are with the folks in Texas, as well as the folks in New Mexico. Chip-making giant Nvidia became the first company to surpass $4 trillion in market value yesterday. Shares rose 2.8% after opening to reach an intraday all-time high of $164 a share. It did sell off a bit going into the close, so I've got a news article for you. Traders are hoping that we can close today above that $4 trillion mark. NVIDIA was founded in 1993 with a focus on developing graphics processing units, or GPUs, primarily for the video game market. Unlike central processing units in a typical computer, GPUs are built to parallel process specific tasks. The tech giants like Microsoft, Amazon, and Alphabet reliant on NVIDIA's high-powered chips to power their AI systems. The company's valuation has skyrocketed in recent years, from under $600 billion just 2 years ago to the world's most valuable company today. Think about that, in 2 years from $600 billion to $4 trillion. The California-based company commands close to 90% of the semiconductor market, far outpacing competitors like Advanced Micro Devices and Cerebras Systems. And have you seen the new movie, Formula One, with the infamous Brad Pitt as the star? My godson and his mother went to see it last night. He said it was quite good. But I'm not here to talk about the movie. I'm here to talk about Formula One, the sport, not the movie. Red Bull fired Christian Horner yesterday as team principal and CEO. Horner, who has led the decorated Formula One team since its 2005 debut, will be replaced by Laurent Mekies, the principal of sister team Racing Bulls. Red Bull provided no reason for this ouster, but it comes a year after Horner was accused of inappropriate behavior towards a female colleague, including sending sexually suggestive messages. He denied and was later cleared internally of the allegations, but the scandal created strain. You can't put toothpaste back in the tube, no matter how hard you try. With star racer Max Verstappen's father openly criticizing Horner. His firing follows the exits of key leaders like car designer Adrian Newey and a disappointing mid-season standing. Typically a top 3 team, Red Bull currently sits in 4th place. While Formula One remains most popular in Europe, the U.S. fan base has grown 10% since last year. The league, worth over $25 billion, largely credits the rise to investments in U.S.-based races and media, including a Netflix docuseries and a feature film starring, yes, Brad Pitt. Well, that's your global news. How about Wall Street? Wall Street is watching patiently as chip giant NVIDIA continues to power toward claiming the spot as the first company to close out a trading day with a $4 trillion market cap. They hit it intraday yesterday, but failed to close above it. NVIDIA has been on a tear this year, with shares climbing 21% year to date and over the last 12 months. This despite the company facing serious headwinds in January over fears that China's DeepSeek meant that AI firms would no longer need to purchase high-priced chips to train their AI models. Well, Trump put a crimp in that. NVIDIA shareholders should be thankful. Stable coins are going mainstream. Since its June 5 trading debut, stablecoin issuer Circle, trading under the symbol CRCL, their stock has climbed more than 500% since June 5th. The rising provider has issued over $61 billion worth of its stablecoin USDC making it the world's second largest in today's $253 billion stablecoin market. On June 30th, Circle announced that it applied to establish a national trust bank charter called First National Digital Currency Bank. If approved, it would be another step toward integrating stablecoin into traditional banking and financial markets. So you're probably wondering, what the heck is a stablecoin? Stablecoins are a type of cryptocurrency whose value aims to mirror that of another asset. For example, someone buying a stablecoin pegged to the US dollar would expect the value of that stablecoin to remain at $1, with some referring to the coins as digital dollars. This sets stablecoins apart from other cryptocurrencies, which can change in value significantly. And that's why I'm not a fan of the stablecoin. Because while the US dollar still remains the world's reserve currency, I don't think I have to explain the rest of that. You see, Bitcoin has no top because fiat has no bottom. From Bloomberg, a set of provisions tucked into President Donald Trump's new tax and spending law has real estate developers and affordable housing proponents cheering. Though some view it as a bittersweet victory. The law makes significant changes to the low-income housing tax credit. The new market's tax credit and opportunity zones, 3 tax-based community development programs that housing groups and private sector investors broadly favor. The revamp is expected to spur construction of new apartment buildings and renovation of older ones, with housing analysts saying they could create as many as 1.2 million more affordable units over the next 10 years than they would have if the programs had remained the same. Again, another feather in Trump's cap. Promises made, present promises kept. And from Bloomberg, Donald Trump has threatened to impose a 50% tariff on Brazil over its domestic political affairs. The most extreme case yet of the U.S. president weaponizing trade policy to make unrelated demands. Trump cited the treatment of former President Bolsonaro, a right-wing populist leader, in his letter to Brazil yesterday, calling on authorities to drop charges against him over an alleged coup attempt. This trial should not be taking place. It is a witch hunt that should end immediately, Trump wrote in the letter. And if there's anybody that knows anything about witch hunts, that would be Trump. If he had been born 150 years earlier, he'd have probably been burned at the stake in Salem, Massachusetts. But thankfully, he was born in our lifetime. How about that cereal? Kellogg. Shares of Kellogg surged 30% today as the maker of Fruit Loops and Frosted Flakes announced it had reached a deal to be acquired by Italian sweets company, the Ferrero Group, for $23 per share in cash, or about $3.1 billion. Kellogg stock had soared overnight on a report from the Wall Street Journal that the companies could finalize a deal as soon as this week. Shares were recently trading for $22.92, a level they hadn't hit in more than a year, as shifting attitudes toward diet and price increases in the category ate into cereal sales. The stock had entered trading today slightly negative for 2025. And from Reuters, the insurance cost of shipping goods through the Red Sea has more than doubled in recent days after Yemen's Houthis attacked and sank 2 ships, killing at least 4 seafarers after months of calm. The Red Sea is a critical waterway for oil and commodities. Traffic has dropped sharply since Houthi attacks off Yemen's coast began in November of 2023, in what the Iran-aligned group said was in solidarity with Palestinians in the Gaza war. War risk premiums have risen to around 0.7% of the value of a ship, from around 0.3% just last week before the latest attacks took place. Sources familiar with the matter said, with some underwriters pausing cover for some voyages. Some of these shipping companies can't even get insurance now. But that will be fixed. Alphabet Incorporated's Google is adding the ability for paid users of its Gemini artificial intelligence assistant to turn their photos into short video clips, expanding access to a tool the tech giant launched earlier this year to a more limited audience. And while we're on AI, let me say, I completed my first assignment in my quest to become a certified AI developer, and I got 100%. I gotta admit, it was a pretty easy test, but I'm on my way. And I was going to go with Sam Altman's course, but I thought having a certificate from Google just might be more impressive. I'm human. All right, Meta Platforms reportedly offered remember we talked yesterday, I think it was, about these tech companies poaching talent from other AI companies. Well, Meta reportedly offered a pay package worth more than $200 million to poach Romain Pang, Apple's top executive in charge of artificial intelligence models, as the Facebook parent builds up its new superintelligence AI division. Good Lord. The guys we used to call nerds when we were in school, elementary school, junior high, high school, depends on when you were born, I guess. Man, they're making bucks like football players. Interesting. Makes you wish you'd have stayed awake in math class. Huh. From Reuters, Brazil is scrambling to respond to U.S. President Donald Trump's announcement of 50% tariffs on Brazilian exports, with President da Silva convening an urgent cabinet meeting today as officials work to de-escalate the crisis. Brazilian diplomacy has always been available to the American government to seek a solution of greater partnership and greater understanding, as we have always done, according to Brazil's finance minister. I don't believe the situation will continue, he said, calling the tariffs announced by Trump on Wednesday unsustainable. Well, at least they get the point, right? They say they can't live with 50% tariffs. That's why you're getting 50% tariffs. You need to get your house in order. 2 government sources told Reuters that Lula, the new president, is calibrating Brazil's response and is unlikely to announce concrete measures today. His chief of staff said the government is forming a working group to decide how to react. It kills me when I hear stuff like this. Well, we need to have more conversations. Let's break up into small groups and discuss it. Government bureaucracy. You thought? And last from Wall Street, the robo-taxis. Tesla will likely expand its robo-taxi service in the coming weeks and months, and will also soon have Grok, the chatbot made by another Elon Musk-owned company, adding Grok to its vehicles likely by next week. Musk made the statements in a pair of posts on X, the social media platform he owns, formerly known as Twitter, responding to users discussing whether Grok would come to Tesla vehicles and about Tesla's robo-taxi services that launched last month in Austin. Musk said the area around Austin where its robo-taxis can operate will get bigger this weekend, and said the EV maker is awaiting regulatory approval to expand to California's Bay Area, which Musk said will likely happen in the next 2 months. The robotaxi launch has been relatively smooth, with some reported issues like vehicles stopping in the middle of an intersection and briefly driving on the wrong side of the road. Yeah, that might not be ready for prime time just yet, but it's out there. Okay, time for local news. As you know, Logic 247 is on hiatus after reaching 20,000 individual handcrafted alerts over a period of 361 weeks, where we averaged on a weekly basis 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our passport holders. And while we're on hiatus, I guess I'll just go ahead and let you know this. I've always said 20% or less. The actual number's really closer to 12%. But nobody wants to brag, right? But now you know. Now, the concierge trade alerts, we had that years before we introduced Logic 247. The Logic alerts used to come out around the clock, but the CTAs are posted typically 5 minutes ahead of the Globex Open. So we all know we're in the Thursday session, but the Thursday session began last night, Wednesday night at 6 p.m. Eastern. What that means is all of our traders and trial members had all of these targets 5 minutes before the market even opened. S&P 500, Dow, the Russell, crude oil, the NQ, gold, and silver. So let's go look at the charts and see just how valuable that information was. Keep in mind, when we look at the individual 30-minute charts of each of those markets, you'll see these numbers posted on each chart. And just remember that our traders had this information 5 minutes before the market opened. And that's kind of important. We'll start with the daily chart, where we always do, the S&P 500, the bellwether. And look where we are, pushing up against blue and climbing once again. This market, it's like trying to hold a beach ball underwater. You can only hold it for so long. Your arms get tired, you let it go, and it pops up again. So this is major resistance. Okay, we're at the all-time historic high. Well, just shy of it. Up against blue and climbing, which when it gets directly above price becomes resistance, as it was yesterday, and as it is so far today. Now, just above, we have the 62% fib extension, which is potentially good resistance. And then we have the 100% fib extension, which is up at 65.85. Now, this seems like a long way off, but if this market keeps climbing, we'll get there sooner than later. But I really think before we see, especially this number, we're going to see a retracement back to the BBC. Green line is called the BBC, which stands for Bull Bear Cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, as it did on April 24th, we're bullish and expect higher prices. Now, no matter what methodology or strategy you use, something that's inherent in all markets and all trading strategies is this simple fact. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. When price reverts to the mean or pulls back to the BBC, the pullback holds more often than it doesn't. Like it did there, like it did there, and there, until we finally got back above it April 24th. Then the first pullback held, the second pullback held, the third pullback held, the fourth pullback held. Now we're waiting on that fifth pullback. Now, even though the pullback holds more often than not, we know that eventually price is going to trade through. It's traded through. February 21st of this year to the downside, and April 24th to the upside. And here we are, the 10th day of July. Resistance, support, support. Yesterday I talked about this. If we continue to consolidate sideways, the BBC is going to rise to that 38% fib extension, creating what we call support times 2. Now, the daily chart's important. I'm sure you don't trade it, but it's a great way to get a big picture view of what's really happening. Institutional traders, Goldman Sachs, BlackRock, State Street, and many others. The ones with the really deep pockets. They trade in such incredible size that they are the ones who literally move price. So whether you're trading futures, stocks, crypto, Forex, or ETFs, I encourage you to spend 2 minutes with the daily chart of whatever it is you're trading before you go to the smaller time frames and actually start putting on and taking off trades. Number one, it gives you a free look over the shoulder of the deep pockets that move price. And it also allows you to identify weeks and months ahead of time where price is most likely to find potential resistance and potential support. All right, the 30-minute chart of the ES. The vertical lines you see separate today, Thursday. Here's Wednesday. Back here's Tuesday. Back here's Monday. The horizontal lines are our weekly trading zones. When price drops to a weekly trading zone, we expect support until proven otherwise. When price rallies up to a weekly trading zone, we expect resistance until proven otherwise. Price is always trying to reach a weekly trading zone. If price is above the 30-minute BBC, it's trying to get to the zone overhead. And if price is below the 30-minute BBC, it's trying to get to the zone below. The zones are published every Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. We've published the zones for our traders for the last 15 and a half years and a day. True story. Okay. Yesterday, live on the broadcast, we drew in this window of opportunity, and this one and this one. See, you don't have to know if the market's going higher or lower. You just need to identify where opportunity is, no matter which way it goes. So that's what we did. And during yesterday's session, we filled the 2-point window. That's enough to get your goal for the day. Then we backed up and did it again. Then we backed up and did it again. 2, 4, 6 points. And then we had drawn a 5-point window, which filled once and filled twice. That's 10 points. But again, you only need 2 points to get your goal for the day. So if you caught this one, you should have just put your mouse away. Because every time you put on a trade, well, you run the risk of handing back to the market whatever it is you've earned for the day. So this was the opening candle last night. It ran into the weekly trading zone, which again we expect to be resistance until proven otherwise. Resistance will always send the market looking for support. Resistance at the zone, support at the zone. Now keep in mind, these are the zones that were published Monday morning at 6:15 a.m. Eastern. Hopefully you can see how helpful this information is to our traders. If you're in this short trade coming down, you knew where to expect support. And if you were in this long trade headed up, we hit the zone actually before the close yesterday. And we weren't able to get above it when the markets opened at 6 p.m. Eastern. So once we found support, we're going to go look for resistance, which we found again at the same zone. Now we got to go find support. The pullback to the BBC held. That sent us all the way up to the long target and beyond. And if you scroll left, you'll find out why price stopped rising right there. I want you to do the work yourself, okay? It has more meaning. See, when I just tell you and show you, well, I'm just some guy on the internet. But when you do it with your own hand and your own eyes, then it becomes really meaningful information. So what's going to happen now? Well, we're consolidating sideways. The black step line has gotten directly above blue and climbing. I suspect we're going to get a retracement back to the zone, the one that was resistance, 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 resistance. I think it's going to become support, because this area right here will be support times 2. Remember, the pull back to the BBC holds more often than not. Now that doesn't guarantee us it's going to hold. It might be one of the times where the pullback doesn't. But right here, you see this bullish cross? That's when the blue line gets above the green line. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. So look at the low of this candle and let your eyes wander over here to the bullish cross. Now, our traders know this and understand this, so imagine how beneficial that could be for you if you don't understand it. If you don't and you want to learn, well, we'll be happy to teach you. That's what we do. Imagine knowing ahead of time that there's an extremely high probability that the sell-off's going to grind to a halt. This was a red candle coming down, but it hit the bullish cross and ended up closing a green candle. It even ran all the way up to resistance at the zone and then backed off, setting the stage for this beautiful move all the way up to the long target. The Dow. Here's where we opened last night. We came down to the weekly zone, consolidated for hours. We didn't quite touch the short target. We had a low of 565, and the target was 560. So we missed it by 5 ticks, or 5 points. The Dow doesn't really have ticks, it just has points. So we missed it by 5 points. Well, red turned to blue. That's bullish. And it took us up above 77.57 million worth of BTC shorts just liquidated. Wow. So we get a leg. That's market structure. And a retracement. The pullback held. So then we hit the long target. And then we hit the weekly trading zone. Remember, we found support at the zone, and then we found resistance at the zone. We backed up and made another run, and we got oh so close to the next zone overhead. We missed it by exactly 5 points. The high of this candle, 45,005. The zones at 45,010/15. Pretty cool. The Russell. Here's where the Russell opened last night. It pretty quickly, well, let me point this out. You see this black step line? See how on the way up it was on the left side of blue and climbing? Then they sort of blended together, and then the step line crossed blue and climbing. When that step line moves to the right side of blue and climbing, what do we expect? A retracement to the BBC. And that's exactly what we got. And then we consolidated along the BBC for hours. Red turned to blue. We get a leg. We get a retracement. The pullback holds. We hit the long target and the zone, which again we expect to be resistance. Resistance sent the market looking for support, which it found at the BBC. The pullback held. And then back up to the long target. And then a pullback. And then we overcame the target, overcame the zone. And remember, price is always trying to get to a weekly trading zone. So it's trying to get to the next zone overhead. But look at that step line. Can you see how it's starting to angle to the right? It's because we're consolidating sideways. Once this step line gets on the right side of blue and climbing, expect a retracement to the BBC. Then it becomes a matter of, is the pullback going to hold or not? It holds more often than it doesn't. But you never know. You can try to second guess it. Or you can be patient and see it. On the NQ yesterday during the live broadcast, we drew in 2 windows of opportunity on the NQ, 20-point window and a 10-point window. Well, we filled the 20-point window. Now on the NQ, 20 points at $20 a point, that's worth $400 per contract traded. If you've earned the right to trade 10 contracts, then that little window right there is worth $4,000. Then right here. See this little crevice? Yeah. It's these highs across here. Price comes back to the BBC. Now the pullback holds because these candles are still touching the BBC, but where do we find support? At the weekly zone that was published Monday morning at 6:15 a.m. Eastern. Red and falling keeps us hugging that zone for hours. Finally, off the London Open, we get back above the BBC. Red and falling turns to blue and climbing. We get a leg, a retracement, a leg, a retracement, and then a leg that takes us right up to the long target. Resistance will always send the market looking for support, which it found at the zone just below the short target. Now to give you an example, this candle right here opened at 22,960 and it dropped, we'll call it to 22,940. It went substantially further. Opened at 60, 22,960, and dropped to 22, we'll call it 910. That's 50 points. At $20 a point, that's $1,000 per contract traded. Support, of course, will send the market looking for resistance, which it found at the BBC so far. Now we've got support here at the zone, but if we can break through the zone, we've got support here, then again here at the target, and at the zone below. Now at the end of the broadcast, I'll do as I did yesterday, and I'll go through and draw windows of opportunity, carry you through the rest of the afternoon, tonight, and tomorrow. This 20-point window not only got filled yesterday, but it filled again today. Sounds like Michael's on the scene. So we'll pause right here. We'll pick up with crude oil when I come back. Michael's going to give us a recap of what happened in the live training room this morning. Then do some live trading on the TradingView platform. Then I'll finish the recap of the CTAs and wrap things up with our good word for the day.
All right.
Is that you talking?
That is, well, I'm here, yeah.
No, I mean, I heard an unusual noise in the background, like a space alien.
I think mosquito guy is outside, I think, which is really stupid because we're going to have like 5 hours of rain today.
Oh my goodness. So it's just going to wash away all the...
It is. It is.
Oh,
well, back.
You may have a mosquito problem, but your charts look good.
Oh, good. Good. All right. That's good. That's what counts. That's what counts. I can stay inside.
All right.
Stay inside and read my charts. All right. Here we go. Ready? Here. Good afternoon, everyone. Today is Thursday, the 10th day of July, 2025. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. There is no credit card required for the trial. Click on that purple button, and it's going to bring you to this registration page. This will be a new page tomorrow, but for right now, fill out this registration page, and down at the bottom here, put in your TradingView login ID. If you don't have one of those, it's either login ID, username, whatever it is. Give us that. If you don't have one of those, click on this link and go get one. Okay, you need that to get the charts running on your desktop. All right. Spreadsheet. We had a pretty good day today. We're up to $965 a contract, and we managed to maintain it, not give it all back like yesterday. But if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. 161 ticks on the NQ, which I believe is pretty close to the high for the day. 166 was the high for the day. We're up 12 ticks on the Russell, which was the high for the day. We're minus 15 on gold, which was the high for the day. It was also the low for the day. And we're up 20 on the ES, which was the high for the day. All right, so we're up $965 a contract. Today it took 17 minutes and 3 trades to get to $1,800. We took a total of 20 trades this morning. So on the month now, we're at $5,565 over 7 business days, averaging $795 per contract per 2-hour business day. On the year, now we're at $161,030. So for 116 business days, averaging $1,388 per contract per 2-hour business day. Now, if you have not taken the free trial and you want to take the free trial, go here to mytradingiq.com and click on the purple button, and there's no credit card required for the trial. Totally switch gears there. I don't know if you caught that. The 2420 blueprint. If you are doing the 2420 blueprint, that means you add 1 contract for every $2,000 that you gain. If you are doing it the way I'm doing it, the way that I've suggested doing it, where you stop trading when you get $100 per contract, you should have about 1 new contract a month, right? That said, you would be up to your 7th contract right now, right? 7th month, 7th contract. And so far this year, you've only had to work 14.65 hours. 14.65 hours. And you would be up, if you did everything just like me, your gross would be $71,162, right? Your net, if you did everything just like me, you'd have 1,053 round turns. Your net would be $68,530. That's after commission using my rate. Pretty good stuff. Average hourly earnings, $4,857. All right, pretty good stuff. Now, today, we'll just start from the left and work our way across, all right? On the gold, we only had a couple of trades, 1 break even and 1 minus 15. That's what I was saying. That is what I was saying on the gold. Minus 15 was the high of the day. It was also the low of the day. We had a break even trade on that one, and then a minus 15 on this one. Just flat out, that was it. This morning I did go through every market except for gold bar by bar this morning up until like 10:30. I don't feel like doing that again right now, but there were some pretty good opportunities today. I'll show you some in here. You can see I highlighted areas in here that I didn't day trades that were actual trades when I was going through it bar by bar. On the Russell, this was a trade, 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 this was a trade. Now, for what it's worth, I will go through a little bit here. Okay, if you're doing it bar by bar like this, and you're going here. Now, we're below the YBR, right? The midpoint is not stable right now because you've gone through 100% retracement, so the midpoint's trying to find some stability. So right here, it finds a little bit of stability. You finally get into the overbought. You go through the overbought. Now right here, a down close from in here. See, it brought the midpoint up. The down close was above the midpoint right there. So that's not a great place to trade. When you're shorting, you want it to be at or below the midpoint, all right? So the next one, it does go down. Then now you get some more stability here. So right there, it's at or below the midpoint right there. That's your down close, all right? That's what you want to trade. You came out of the overbought with a down close right there. That's a conservative trade. The aggressive trade, you actually did close right there at the midpoint when you went into the overbought. You could have taken aggressively at the top or conservatively at the bottom of that bar. Okay, that's the kind of thing that I did this morning, bar by bar for all the markets except for gold. I didn't do gold. You see, and then as it moves along, right now you're still below the YBR. You're looking to get back up into the overbought while you're at roughly at the midpoint, looking for a trade off the midpoint. So there, now you're above the midpoint and you're above the overbought. So now you're looking for an opportunity on a down close that's going to put you at or below the midpoint on a down close coming out of the overbought. Bam, there's the next one. Okay, and down it goes. That's all you're doing again and again and again. Here's another one. Looking for your next entry to be at or below the midpoint on a down close, and there it is right there. There's your next one. Okay, that's all you're doing. That's all I'm doing all day long. The same thing again and again and again. So if you go all the way to the end right now, the midpoint's down here. We're looking to get into the oversold, come down, hit the midpoint, and give us an up close. That's it. That's all we're doing. Okay. That was the Russell. We ended up with a plus 12 on the Russell. Devlin. I will respond to you shortly. You're not in here right now, are you? I don't think so. You're not in here. Okay. This is the ES, right? Yeah, the ES. Okay, so our first trade on the ES was right here. We ended up with minus 10 on that one. The next trade was right here. We got plus 10 on that, getting us to 0. Then we had a plus 8 on that, getting us to 8. Then plus 8 on that, getting us to 16. Then a plus 2, getting us to 20. And then a plus 2 again, getting us, I'm sorry, plus 16. Got a plus 2 getting us to 18. Then another plus 2 getting us to 20. And that was it with that. Now, if you do the bar by bar stuff again, you know, you're above the midpoint here, but it got way down here. So I'm waiting for it to stabilize, to move up and then pull back down where the midpoint is at someplace you can trade off of. All right. So right here, it moved up to hit the bottom of that bar right there. So you could look for a trade off the bottom of that bar. I'm sorry, right off the midpoint right here if you wanted to, where you came out of the oversold right there. This looks like a better spot right here. Right here, it came down and hit the midpoint. The midpoint was there. It came up, down, hit the midpoint, came off the midpoint right there. So now you'd be looking for the next opportunity to come down, hit the midpoint, get this down into the oversold, hit the midpoint, and then get an up close off it. Okay. That is it for the ES. We ended up with plus 20 on the ES. The NQ was a big winner again today. We're on the 19 range again on the NQ, guys. Okay. You can see I drew all kinds of stuff in here this morning. And go all the way here to the beginning. All right, reminder, it's a partners meeting tonight, 8 p.m. If you guys have any questions you want us to go over in the partners meeting, email them into us. Even if you don't show up for the meeting, I'll still go over, I'll still answer the questions, or we will, if it's for me or Dwayne. Either way. All right, so on the NQ, this first trade right here, I got 16 ticks. Then the next one I got 45. That's where we got the goal on 6 trade. 45 ticks, and then the trade after that, we got another 45 ticks, put us at 106. Then we stopped out, put us down to 81. Then we got to 93, and then another 45 tick to 138, and then went from 138 up to 166, and then we stopped out again right over here. Went from 166 down to 141. I highlighted this one because it did have enough into profit for me to bring the stop to break even from where I entered, and I made it orange because I kind of messed that one up. Then we went from 141 to 161 right here, and that was the last trade that we did on the NQ. All right, so yeah, that was it. So I am going to do something really quick right here. No, I'll do it later. Anyway, so now during the break here, we had a lot of movement on the NQ right here, a lot of movement right back up. And so actual trades, you get into some chop right through here, still in a little chop right here. One of the things we went over this morning was when to go from aggressive to conservative trades, choppy, not choppy, all that kind of stuff. In here, you're in a little bit of chop right here. The leg lengths are getting kind of long, so you might want to not do the aggressive trades in here. You might want to just hold off on that now that the leg lengths are a little bit longer. Okay. All right. So, yeah. Well, this is it right here. We're looking for an opportunity right now. You're above the YBR, so you're looking for it to pull back down and test the midpoint. Here on the ES, you're above the YBR, so you're looking for the same thing there. You're flipping the YBR over here on gold. So on all these, you're gonna be above the YBR, looking for pullbacks to go long. And every one of these charts right now. All right. Looking. And we needed to pull back to have a trade here. It's 111, so we have 19 minutes left. We should get something going on in here. Now, I'm sure Dwayne's probably gone over this already, but if you look at the bigger picture stuff right here, we are getting up above the all-time highs, right? This is the all-time high right over here. We're almost back up there. What is the all-time high? Looks like it is 33.25. Let's put a mark on that. Right here. Oops. Coordinates. Okay, that's the all-time high right there. I'm gonna make it a different color. Make it that color. Maybe not so thick. A little thicker. Like that. There we go. That's the all-time high. So we could hit that today. We could actually put a new all-time high in today. We probably will, as a matter of fact. We don't have much for news this week, but we have big news coming out next week. Now, we're expecting it to actually drop down here and test the BBC at some point. When it gets underneath this, like this right here, it usually will go down and test the BBC. Okay, it might take a little while for it to get there, but usually it's gonna, when it gets underneath, it's gonna test the BBC. Now, this would be the third. Actually, that's 1, 2, 3. Be the fourth test of the BBC, so it may actually go through it. This right here, though, the way that this is coming together with the head and shoulder pattern, we should see a big move up right now. I had drawn this out. I had drawn this out somewhere else fairly recently, but taking the leg lengths, all right, we'll use this one right here, okay, there to there. Use that as leg length up, and this as the leg length back down. Okay, I'm gonna make that black. Okay, and this one I'll make yellow. There. Okay, so this is our leg length up. All right. So right there, it actually took a while for it to get up there, but if you use it right here, and just a little bit higher right here, would give you that leg length. This was your pullback right here. This wasn't really, it didn't really stop there. It kind of pulled back. It didn't pull back, full pullback. So coming up here, if it does get up there, then the pullback from the top right there, right about there, we get right back down to the BBC, and that would be perfect. Okay, so it may go up here, hit this level. That would be the leg length to complete that leg length, and then pull back down and test the BBC. That's what I'd be looking for over the next week or two. Just my opinion, my humble opinion about where things will go. Because once you get into all-time highs, all you have is technical analysis. You don't have anything else you can look at. You can't look left anymore. You can just use what's happened when you look left in the past, but you have no more areas of resistance up above you. Everything up above you is resistance, or everything up above you is wide open, however you want to look at it. I did all that to say this. We didn't end up with the trade here. We didn't end up with the trade here, but we flipped the YBR here, and we're about to flip the YBR here. Okay. Let's see, the NQ just flipped the YBR. Now the midpoint is right up here on that. Okay, the ES, when it gets down here, it's about to flip the YBR again. All right, so we came out of the oversold that shifted the midpoint up. Okay, We didn't get anywhere near it on the pullback, so we shifted it up. So now it's going to push up, come back down, and bounce off it. The ES has a trade right here on an up close. ES will have a trade right there. Trying to find my ES DOM right now. I don't have any DOMs up. Where's my ES DOM? Here it is. Okay, so on an up close right here on the ES, we'll have a trade. It's got a low here of 425. That's not the ES. GC. That's, where is my ES DOM? That's a Russell DOM. That's the NQ DOM. That's the gold DOM. Right, the ES still hasn't given us a trade, so I'm going to find it. Here it's EP. That's how I keep looking for ES, and it's EP. All right, so it's 24 and a quarter up to 26 and a quarter is what you're looking at on that. 24, 25 is the low. So you're looking for an up close at 26. It's going to be up close. It's going to be at 26 to buy 26 and a quarter. Okay. It took me a while to find that thing. Just do always on top on that. So I got the gold and the Russell, and the ES is over here, and the NQ is in place. The NQ's almost got a trade here too, guys. Right, on an up close, it's going to go sideways in the overbought. It hasn't hit the midpoint yet, but it could hit the midpoint, give a down close on this bar, and that would be a trade. Okay. All right. And there we go. We're along the ES right now. Now, it should go up to the high of the day. At least get up to the high of the day. If not, halfway up to the high of the day, which is here at 27. That won't be enough to get the stop to break even. So, I'm looking at the numbers up here. It should get up to there, and then there, and then there, and then there, eventually. Okay, there's nothing down below that's going to draw it down as much as the things up above that should draw it up. All right, when you look at things like this in the DOM, after you have a valid entry criteria, you meet that criteria, then you can look at that stuff. Don't look at it until you get all that. All right, now we're in, so this right here is a good target. 29 is a good target. Beyond the 28 right here, it's swing high. 29 is a good target. Okay. These numbers are not a reason to enter the trade. They're a reason to stay in the trade, not to enter. Okay. Keep that in mind. Over here on the NQ, we need a down close. So we're going in opposite directions here on the S and the NQ. This needs to go up one more to get the stop to break even. It's almost there. It's going to go. There is. Did the yellow go up? I saw price go up, but I didn't see the yellow go up. It might have gone up. I don't know. What does it say here? Yeah, it says I'm just going to throw it at break even. We need a down close over here on the NQ. I almost hope we don't. There, it just did. I almost hope we don't get the down close here on the NQ. I hope it goes up and flips YVR for us so everything's going in the same direction. Okay. See, it's getting away from the midpoint here, so I'm not going to trade it on the down close anyway. It is going to flip the YVR. That's good. That's what I want to see on the NQ. So the S trade that I'm in right now, everybody should have done that. Everybody could have done that. We just went up to the new high. Now this is the number right here. 29 is the number. I'm going to lock in some profit on this. Right, that's $500 with 10 contracts. I'm going to lock that in. It should get up to 29 right here. All right, that is the number we should get up to. It just took me out with 4 ticks. $500, but it should still get up to that 29 number right there, and then up here to 32. Now I want to show you this. Right, when you see numbers like that, it's not a reason to take a trade, but you can put a mark on the chart, like right there and right there. Those are significant numbers. So if you get another entry in here, you'll have those there already on the chart. Right? You can use those for targets on the chart. Be a little more enticing of a target. All right, the NQ flipped it around here, and you could actually go aggressively long right here, where it went into the oversold right at the midpoint on the NQ. Go aggressively long right there, buy that. Or you could wait for the up close to give you the conservative trade, whichever you want to do. Those are both valid trades there on the NQ. Okay. And over here on the gold, it's with the YBR. You need to pull back. You need that to get to the oversold. On the Russell, you can take a couple of bars here because you're in the middle. The ES isn't going to give you anything. Okay, in Q. Stop to break even. Stop to +8. +12. It should make it up to the prior swing high at 1075. Right up here. Okay. Nope. 12. Should still make it. Right, even though it took us out. So far in this session, we've had 2 positive trades. That one and this one. Does anybody have any questions about all this stuff? Anybody? Anybody? All right. We don't have a trade here or here yet. This, I want to see it go up some more before it comes back down. This did come back down, went into the oversold, but it's got to come back down again. It's got to finish going up and then come back down again. All right. Nothing anywhere right at the moment. All right. What do I look for when getting double tops or bottoms, or do I just avoid them? Like this right here, you mean? I don't really focus on that so much, Bob. Like all this stuff right here that's going on right here, I don't really focus on that. What I'm looking at really is when it pulls down and hits a midpoint and this gets into the oversold, how much space do you have between your entry point and the swing high and swing low? You know, I do look at that. Like right here, for instance, if this were to give us a down close right now, it would give us a down here, it'd be in the oversold. If you waited for the conservative trade, your conservative trade would put you right here. The swing high is right there. I wouldn't want to do that. Okay. Even right over here on the ES. If you get a down close on this bar, it's going to be in the oversold. And up close on the next bar would put you right about here. So it did get up to that first level that I put in there, you know, in the down. But it's all jammed up in here, so I don't want to trade when it's all jammed up like that. This is starting to stretch out a little bit over here now, so that could work out now. Okay, a down close on this could happen right here at the midpoint and get into the oversold at the same time, making it a spot for an aggressive trade, right? But if you have something like this scenario right here, and it's got to pull back, it's got to have a decent pullback, so you have room to get to the swing high again. Okay, yeah, if it doesn't have any movement, if it doesn't have any space between your entry point and the swing high, it's risk reward ratio. Because your first reward should be the swing high. All right, that's what price should always get to, the swing high. Right, unless you're in a bugle scenario where you're coming off a higher high and a lower low, then the first spot should be the midpoint between that stretch. But most of the time it's going to be like this, where your swing high is going to be your first area of reward. Okay. So you see how this is coming together over here. If we get a down close on this, it'll be in the oversold, probably. And it won't be at the midpoint. So the next bar, depends how it comes together, the next bar. It's really close to the midpoint, but it's not there. Now, the way it came together, it hit the midpoint. We're in the oversold already. So now if we get an up close from here, it's going to put you right about here. So your risk is going to be down to here, and first reward is going to be right there at the swing high. This came together a little bit better when it stretched it out like that. When we first started talking about this, it was right here, but it stretched it out a little bit. So now that's an okay trade to take right there. Okay, on the NQ.
Were you answering Bob's question?
I am answering. Yep, I'm in the middle of answering.
I just answered it in the text. So Bob, when you get a chance, take a look in the question box, and you'll get my version of pretty much what Michael just said.
Okay. Yes. Let's see. So your risk is down here a little bit below this bar, right? You get a 25 tick stop, so your stop's down here. Your reward is right here at the swing high. That's your first year of reward. Now, can you get your stop to break even between here and there? Yes, you can. So is that okay to take? It's okay to take. You're going to get this leg length. That's what you should be thinking. You're going to get another leg length like that. You draw down, your pullback is about the same as the last pullback. So it should have just enough. Should have at least enough in it, not just enough, but at least enough in it to get it up to the prior swing high. Okay, so here's the trade. We'll see what happens with it. We only have about a minute left in here, but I think, do I have something? Wes, I have Wes today at 2 o'clock. Are you in here right now, Wes? Wes, are you in here right now? He's not in here. Okay, I do have another meeting coming up. I'm not sure I remembered. I'll have to text him. Let's see. Usually I like them to text me and remind me. So we're waiting for the trade right now. Now we'll see if this pans out. It should get up enough to get our stop to break even. Am I in at the right spot? I'm off by 4 ticks on my entry. All right. So if I was in here at 1275, then I would have had my stop at break even. If I had a better entry on that, I would have had my stop at break even. Okay, so it should still work out enough to the point where I should get my stop to break even here. Okay, from 1375 it's going to get up to 1625. I think, right? 1475, 1570, yeah, 1625. And we should get up there. There we go. There it is. Stop to break even. Okay, now you're up at the swing high, so lock in some profit. When you get up to that prior swing high, lock in some profit because that's the first year of resistance right there. All right, so I have 8 ticks locked in on this. Even with the bad entry, I still got 8 ticks locked in on this. Okay, I'm going to lock in another 4, and then I'm going to lock in another, that's 6. So I think I was out with 14 ticks right there.
Good job.
Okay. And that's it, guys. Right? That's all you have to do again and again and again. So we had a few different trades here. I think we had 3 trades that we made money on. That one, and that one. All right. If you have not taken a free trial, go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. Just click on that purple button and you will be brought to this registration page. Fill it out, and then we'll get your indicators indicating on your charts and get you into the room in the morning to start trading with us. All right? Keeping it simple. That's right, Bob. All right. That is it, guys. With that, I'm going to wrap it up and pass it back out to fabulous Phoenix, Arizona, in Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready, and you are perfect.
Yeah, I was going to mention it to you this morning, but I passed my first test in my AI developer course.
Oh, really?
I got
That's good.
100%. It was pretty easy.
Excellent.
That's when I told my wife, she goes, "How hard was it?" I go, "It was pretty easy." But anyway, I decided not to go with the Sam Altman course. I actually went with Google's course, just because I thought my certification would look more impressive with the Google logo on it, as opposed to the Sam Altman logo, because everybody knows Google. So, you know, when I was younger, I took a lot of acid to try to kill my ego. That's what they said you do. You got to get rid of your ego. But it still rears up its ugly head every now and then. So
just gonna take another hit.
I just got to get another hit. You can't find any now.
Yeah, I know. Now they got all kinds of. Now you got to eat Tide or something like that.
Oh my gosh, not me. Oh yeah, you're talking about people eating those Tide. I don't think they do it to get high. They do it because they like the taste of it or something. Before that, people were eating dryer sheets. It's bizarre. I think it's a sickness.
That's just strange.
But the other stuff, you just put some flowers in your hair, take your shoes off, go lay in a meadow, and visit the universe. All right.
Yes.
Recap of the morning session.
Today it took 17 minutes and 3 trades to get to $1,800.
Good job.
Thank you very much.
Okay. All right, guys. I'm going to pick up where we left off with crude oil. As I mentioned yesterday, I thought crude would be heading lower based on the inventory numbers and the fact that OPEC knows we can stand on our own 2 feet. We don't need their foreign oil anymore. So here's where we opened last night. Yesterday on the live broadcast, we drew this short window of opportunity, and obviously we filled it. Then we found support at the weekly trading zone, the one that was published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. So support's going to send the market looking for resistance, which it found at the long target, right there where blue turned to red, and also where the step line crossed blue and climbing. So resistance is going to send us looking for support, which the market found at the weekly trading zone, just like it did here early last night. Support will send us to resistance, once again, at the long target. And then we hit the short target, and then we found support at the zone, which bounced us up to the underside of the short target, and then we dropped like a rock. And that was at 9 o'clock, ahead of the Wall Street Open. And then we found support at the zone, which bounced us up to resistance at the step line, which then sent us back down to support at the weekly trading zone, and that support bounced us up to resistance at the weekly trading zone, which sent us back down to support at the weekly trading zone. Oh, and this 10-tick window that we drew days ago, that finally filled. And this 10-tick window, that filled yesterday, but we talked about that yesterday. On yesterday's broadcast, this window had not filled yet. So this is Thursday, Wednesday, Tuesday. What did I draw that off of? I drew that off of Monday's market structure. And it finally filled on Thursday. That's planning your work ahead of time. Gold. The only window we drew live yesterday on gold was this one, and it didn't get touched. But this 4-point window, which had not been touched, it filled right here. Okay. We sent price back down to the BBC. The pullback held. It holds more often than not. And then we almost fill that window again. Now that's a $400 per contract window. So should have gotten at least 300 out of it. And then it filled again, then it filled again. Market loves to repeat itself. Just got to stay on top of, where the opportunities are. And remember, they never, like this one here, it will never expire until price drops to 32.94 and enters the window. Now that could be in a week, it could be in a month, it could be never. I mean, gold might literally never retrace back to that price. I doubt it, but just saying. So we opened last night, and in the opening candle, remember, all of our traders had these targets 5 minutes ahead of the open. So this first 30-minute candle opened at 33.22.2 and ran to 28.6. So that's about $600 per contract traded in the first 30-minute candle. Then we pulled back into blue and climbing, and then bang, we hit the long target, pulled back, hit it again, pulled back to the BBC, hit it again, got above it, didn't quite make it all the way to the zone overhead. This resistance that you see here, follow the horizontal line on my cursor. It's this high right here from 2 days ago. Market has a memory. Then blue and climbing, when it couldn't get through that area, blue and climbing, and you should make a note to yourself what a powerful area that is. What was the high of that candle? 33.39.2. So you should make a note to yourself that 33.39 on gold is pretty major resistance. Okay. So the next time it goes up there, get ready for it. And specifically, at 33.88 half, you don't enter a long trade because you could be driving right into a brick wall. Let it get above it and then hold on the pullback. Okay. Because there was a question about a double top. This is like a quadruple top or quintuple or whatever. So we're back below the BBC. We have red falling, but the step line is crossed. So, and red and falling is directly below price. So price is trapped right now. Wouldn't expect much out of gold until we either break this low or get back up above the long target. And then silver. Silver, we drew this window live yesterday, this window live yesterday, and as you can see, this window filled beautifully last night. And that's 2 cents is $100 per contract traded. Now, at the open last night, we opened at 36.60. At 37.60, that would be $5,000 per contract traded. And what was the high? 37.51. So we missed it by 9 cents. The price of silver moves $1, that's worth $5,000 per contract traded. When crude moves $1, that's worth $1,000 per contract traded. Silver's $5 for $1, crude's $1 for $1, and gold is $100 for $1. Okay, so let's see what we got. Hopefully everybody sees this. Okay. So what are we talking? 37.39 up to 37.48. That's 9 pennies. That's $450 per contract traded. Now, you don't have to stick around for the whole 9 cents. You can get your goal for the day and be gone. $2 is $100. So half a 9 is 4.5. So that's $450 per contract traded. On the short side, let's do this. I don't know that silver, I think we rally into the end of the week, but just in case, you got to embrace all possibilities. So on the short side, consider selling 36.98 down to 36. We'll call it 93. So that's 5 cents. $250 per contract traded. Now, as you approach a window of opportunity, look at your range chart, whatever size range chart you use for that particular market, and make sure you're not buying just as the market's about to enter a retracement, okay? Or sell just as the market's about to enter a retracement. So by spotting your opportunity on the larger time frame, you can then enter with surgical precision by using the smaller range chart. In Q, well, see right there where blue turned to red? That's probably good resistance. So let's see what we got here. 230.40 to 230.53. So that's 13 points at $20 a point, $260 per contract traded. That's on the long side. Short side, selling 953 down to 38. Let's see, 38.48. That's 10. So that's 15 points. At $20 a point, $300 per contract traded. ES. 63.33 up to 37. 4 points. $50 a point, $200 per contract traded. And I don't foresee it, but you got to embrace all possibilities. So 63.07. I want it to be 06. $63.06, $63.04. 2 points. Goal for the day. Now, if price were to really start cratering, this is still valid, this is still valid. Okay. The Russell. Oh, we're too close to that zone. The zone's at 94. And we're at 91.90. So 92 to 94, that's a doable trade, but it's not something I want to assign a window of opportunity to. If we can break through this zone, I want to give it some room. $98 up to 02, that's 4 points. And that step line's starting to hook to the right. So maybe we bump our head up on that zone, and then we sell off, and then maybe we trade through the BBC. Pullback holds more often than not, but sometimes it trades through. So let's scoot that down. Yeah. So let's call that 64 down to 62. 2 points. Again, goal for the day. And crude oil. Crude oil, red and falling, has gotten below price. Step line crossed a couple hours ago, but we've seen no upward movement. So now the zone's 50, 55. So I don't want to be at 55, I want to be at 65. Well, that's 60 to 70. All right, that's fair enough. That's 10 ticks, enough to get your goal for the day. And then, if crude really does a turnaround, $68, well, we would be buying 68.20. $68.20 to $68.40. So that's 20 ticks, or $200 per contract traded. And on tomorrow's broadcast, we'll see how these did. Now, if crude wants to just keep falling, $15 is the zone, so I want to be above that at like 20. Okay, so you would sell 66.40 down to 66.20. So that would be 20 ticks. So we got two longs, we got a short. So no matter what price does, there's opportunity. Okay, that 4-point window filled a lot of times. All right, 33, 34, 33, 36. 2 points, $200 per contract traded. On the short side, come over here, grab this. I'm going to move it down like that. Okay, so we'll be selling 33.13 down to 33.09, so that's 4 points. And then if it continues down, of course, this 2-point window here is still valid. This 5-point window has just been beat to death. It filled 1, 2, 3, 4 times. It's $500 per contract traded each time that window fills. And last, the Dow. Dow's been sort of an odd character this week. You know what? Say what? How about we go here? I'll screw it all up as I drag it across. See? Told you. All right, so that would be going along at 45,080 to 45,100. 20 points. Takes 20 points to get your goal for the day. With the Dow. I don't know how many of you trade the Dow, but for anybody that does, now, if price trades through this 20-point window, this 30-point window over here, did it get violated? It did. See how that little wick entered the window and then the whole thing reversed? Getting stopped out is as much a part of trading as trading is a part of life. So, it's 30-point long. That got filled. Now, this is Thursday, Wednesday, Tuesday. We're using Monday's market structure to create this window. And it filled yesterday. Then, Thursday, we used Tuesday's market structure. And that got filled yesterday. So what can we do today on the short side? Let's see it. $735 down to 700. So that's 35 points. You only need 20 to get your goal for the day. Okay, and on tomorrow's broadcast, we'll see what happened with these babies. One last look at the daily chart. Man, we're like at the high of the session, right up against blue and climbing. Just above that's the 62% fib extension. So if we were to poke through blue and climbing, expect resistance at 63. I'd call it 45. The number is 47 and change, but to be conservative, I'd be looking to exit at 45. And then if it gets through that and we have an up week next week, we could see the 100% fib extension. But if we don't go any higher than this, see, we're touching resistance right now, and earlier in the session we touched support at the step line. So one of these two will eventually give way, and we'll either move to higher prices, new all-time highs, or we'll get our retracement back to the 38% fib extension and or the daily BVC. If we continue consolidating sideways, this BVC is going to keep rising. So there you have it. To become a member, send an email to support@cfrn.net. In the email, tell Valerie that you would like to become a member. If you are a veteran, tell Valerie that you are a veteran and you would like to become a member. Because she's going to send you an email that explains all that it means to become a passport holder. And she's going to include a link that you can click to seal the deal. And if you are a veteran, we want to thank you for your service. So the link she sends you will have a special discount built into it. 2 hours of live training every trading day. Now it's an interactive environment where Michael's taking off trades, explaining every move he makes, every trade he takes, and the reason why. And you get to see the results right before your eyes. This is, what's that game? What's that shell game where the guy keeps moving the shells around and you're supposed to figure out which one has the quarter underneath it? Yeah, it's not a shell game. It all happens right before your eyes. Now, while Michael's doing that, you're listening, you're learning, and every time he says something you don't understand, you type in a question. The more questions you ask, the sooner you'll learn. So don't be shy. Your questions are never an interruption of what's happening in the live training room. It's the purpose of the live training room. Pretty soon you'll find yourself asking the same question a second time, a third time, and eventually his knowledge will become your knowledge. Because you're going to get the same answer every time. Rules-based trading. Now, while Michael's trading, you're trading in your demo account so that you can qualify to go live. When you become a member, you're going to get the 24/20 blueprint. That's designed to help you go from 1 to 20 contracts over a period of 24 months. Now, you may not want to trade 20 contracts. You may be happy at 10. You may be happy at 5. 2 points a day out of the S&P with 5 contracts, that's $500 a day. $2,500 a week. $10,000 a month. It's up to you to decide how big you want to grow your trading business, because it's your trading business. And don't ever feel compelled to trade above your weight class. Just because somebody else is trading X number of contracts, you earn the right to add each additional contract. The first contract you go live with, you're using your startup capital, the money you use to open your account. But when you add the second contract, you're adding that with profit you earn in the market. You only add one contract at a time when the blueprint says it's time, and you only add with profit you earned in the market. If you follow those simple rules, it'll make it very difficult to blow up another account. Not impossible, but you'll have to break some rules. Along with 2 hours of live group training every trading day, you get private one-on-one mentoring. All you got to do is request it. Strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, it doesn't matter. Price flows the same across all markets and all time frames. As I've shown you today, from support to resistance, back to support, back to resistance, over and over again and again, it's simply how markets work. And that's why it's so important that you learn how to read the chart so that you know where to expect resistance and where to expect support. Now, just because you expect there to be resistance doesn't mean it's always going to be resistance or always going to be support. But at least you know where to anticipate it, and so you're ready for it. If you're in a short trade and you're coming down to support, you know to tighten that stop up or take your profit, especially if you already have your goal for the day. Don't get greedy. You get the concierge trade alerts the second they're published each evening, typically 5 minutes before the market opens at 6 p.m. Eastern. Every Monday morning at 6:15 a.m. Eastern, you'll get the weekly trading zones. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. And as a passport holder, every Thursday afternoon, you'll get an invitation to attend the members-only workshop Thursday night at 8 p.m. Eastern. Everything a trader needs, all under one roof, one low price. You also get the golden key that opens all the private channels in Telegram. We have a lot of private channels. We have some public channels. The public channels are designed so that you can follow the alerts, trade the alerts if you want while you're on the trial. But more importantly, the trial discussion group is so that you can ask questions of our current stable of traders. Ones who once stood in your shoes. They tried everything in the world, bought every indicator, every oscillator, did business with every grumpy guru on the internet. But unfortunately, they never learned how to trade. That's why 9 out of 10 new traders fail, because they don't have anyone to actually teach them how to trade. So if that's what you're looking for, you've come to the right place. Let's wrap it up with our good word for today. Go the extra mile. Matthew 5:41. Whoever compels you to go 1 mile, go with him 2. Try to picture this. You're in a restaurant with someone whose meal costs $35, and you're watching them struggle over the tip. They have $4 left over, and they know that a 10% tip is considered the very minimum. They waste 5 minutes getting change so they can leave a $3.50 tip rather than leave a little extra. What would have happened if they had left the full $4? They may have made the waiters or waitresses' day. 50 cents may not seem like much, but the message that goes along with it can mean the world of difference to someone, especially if they're having a rough day. It says, thanks, you did a good job. I appreciate you. You're valuable. Maybe the message gets lost. Your server just sweeps up the tip without counting. But God blesses you for doing it anyway. 2 Corinthians 9:6. Whoever sows generously will also reap generously. Think about it. You can increase the happiness of others and bless yourself with mere pocket change. This is just one tiny example of the many ways in which the small things we can do have surprisingly big repercussions. Small acts of kindness set the tone for your day. Going the extra mile, whether it's a slightly larger tip or an unexpected compliment or gift, costs very little, but gets you a lot. And here's an important thought. We can have mountain-moving faith, understand and explain all the deep doctrines of the Bible, and get top marks for personal holiness. Yet God's Word says that without love, we are nothing. 1 Corinthians 13:2. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.